Hey Beena, how are you doing?
Hi Narinder, hope you're safe and I'm good.
I'm safe too, thank you. If we can sort of just move directly into what we want to talk about, last week or earlier this week, you wrote a report about how distressed asset investors are looking to capitalize on the pandemic and the economic fallout that will come with it.
Hmm.
Could you just start by explaining to us a little bit about how they're looking at the overall space in the wake of the pandemic?
Sure. So, firstly, just hoping all our listeners are safe and sound. Just to begin with your question, yes, this is going to increase a lot of stress in the businesses,
Mm-hmm.
as a lot of them, lot of operations of companies have come to a halt. And
Mm-hmm.
given the lockdown, this has been unprecedented. So, this will definitely impact trade, movement, and business deals across corporates and across sectors. Now,
Right.
investors here are feeling that the crisis right now will be much more to a lot of automotives or manufacturing industries because they require people to be on field.
Mm-hmm.
Now, a lot of these small and medium sized or micro businesses will also suffer because they've anyways been grappling with a fall in consumer demand in the
Mm-hmm.
economy right now, and this will further aggravate problems for them.
Mm-hmm.
What investors, the distressed asset investors or funds, are seeing that the stress as it increases will further be an opportunity for them to buy and invest in more of these assets. Now there are some measures which the government has also taken. Now, one positive support that has come is that the government has restricted the threshold limit for companies or lenders to file cases in the IBC, that is Insolvency and Bankruptcy Code. Now, the
Mm-hmm.
threshold limit has been increased from 1 lakh to 1 crore. So, of course, this is a huge relief for a lot of micro, small, and medium sector enterprises because they operate at a lower spectrum of the economic value chain.
Mm-hmm.
But at the same time, we know that the stress does exist, even if it doesn't get classified as a bad loan.
Mm-hmm.
Now, all of these businesses will definitely stop repaying banks for some time, or at least face trouble in terms of repayments to their employees or even to banks. Now, this will directly impact banks' balance sheets as well. So, yes, the distress in the system will increase, and investors will definitely want to capitalize in terms of buying these assets, especially at a time when the pricing might be something that they would be willing to take at, and probably banks may also be okay giving it away at a certain price because as the pile of NPAs increases,
Mm-hmm.
they would want to get it off their balance sheets for now.
But obviously, these investors will require capital to make their purchases or their investments before they even start the turnaround process. So, what is the fundraising outlook for these investors? Because if a bank or even or if you can just back up a bit, another part of the pandemic's economic fallout is that institutions and individuals will want to hoard their capital. Won't that impact the fundraising for these investors?
Right, you're absolutely right that though this is an opportunity for a lot of funds and distressed investors to come and invest,
Mm-hmm.
definitely the fundraising will be a challenge. Now, this will be especially in the case of asset reconstruction companies, which are meant to buy bad loans from lenders. Uh, the domestic inability to raise money will be probably will be made up or covered up by a lot of these investors who are already holding money because they are gauging the situation, and they have been doing it for the past 1 2 years. So a lot of
Right.
them already have enough capital. So
Okay.
ARCs which may not be able to raise money and which already have been restricted on capital may partner a lot of these funds,
Mm-hmm.
and a lot of these domestic funds will also come and participate more because a lot of global funds may also seek distressed assets outside of India. So, this will
Okay.
be more of an opportunity for the domestic funds where even the ARCs can partner. And given the whole market scenario, it looks difficult that from the market to raise capital. But if the equity markets pump up, experts are saying that the fundraising could be relatively easier and it could get better, which may be another opportunity to throw money into these bad assets.
And if we can sort of flip that question and ask about these investors from a returns perspective, because obviously, if you're going to see an impact, whether or not you see an impact on fundraising,
Right.
the market scenario, as we all know, is not looking extremely positive right now,
Mm.
to put it mildly. So
Mm.
obviously, your returns do look like they will be impacted. I mean, based on the conversations you've had with investors in this space, what are you seeing?
So you're right. While the bad asset pile is increasing,
Mm-hmm.
expectations of returns from the equity upside by these funds will also come down. And because of the economic slowdown, it could negatively impact the pricing of these stressed assets. So definitely, banks would be worried in this case. And there would be some banks which may not be willing to sell distressed assets at the current market clearing prices, which would be at throwaway prices for that matter.
Right.
That would restrict banks. But as I mentioned earlier, given the whole pile of distressed assets rising, even on the bank's books, this may lead banks, or should I say stronger banks, to actually let go of some assets and let the experts like ARCs or say distressed funds to work around and turn around those assets. So yes, the pricing and returns will lower.
Mm-hmm.
Also, this could be another opportunity for distressed funds to buy it at lower price, and then once the economy recovers, hopefully sooner than later, they might see returns coming back, and the equity upside could be much more than what they would have thought. But that would be at a later stage, maybe 1 or 2 years or later.
Okay, and that takes care of my next question as well about valuations, because valuations is the third is the third part of our conversation. But if I can also quickly ask you about companies and assets that are already undergoing
Mm-hmm.
the restructuring process, uh, or have their matters pending before the IBC, before the company tribunals.
Mm-hmm.
Um, what's going to happen to these companies? Could you give us a bit of sense on that?
Yes, just to firstly, the National Company Law Tribunal, our insolvency court,
Right,
and also the higher authority, National Company Law Appellate Tribunal, the
right.
NCLAT, that has also kind of restricted their hearings and are taking up only urgent matters. Uh,
Mm-hmm,
we are hopeful that post the lockdown, we might see some more hearings. But
mm-hmm,
as of now, given the less hearings that are taking place in the courts, the
mm-hmm.
the decision making on the resolutions under the IBC has also reduced, which is what will further delay a lot of these, closing of the deals. We were speaking to a lot of experts. They also said that they are seeing a pause in their deals. The ones which they were close to completion have also come to a halt, and they're rethinking on the
Okay.
strategy.
Mm-hmm.
So this could also probably see some delay in terms of closure of deals, especially. And if, just to give an example, one of the ARC heads was telling us that they were close to completion. They'd signed the agreement, but there were some uh, other litigations or which were related to stamp duty. I mean, sorry, not litigations, but there was some stamp duty registration process which is stuck right now because of the lockdown. So clearly, a lot of these one-time settlements, uh, a lot of closure of cases could pause for a bit given the lockdown. But we need to see, because a lot of uncertain things which is happening right now. We'll have to wait as to how the lockdown pans out in the next month, and then we'll be able to know as to how the deals proceed from here on.
And finally, just as a final question, uh, is there any timeline that investors are looking at for a return to what may be called normalcy?
Uh, it's actually very difficult to guess for them as well, given the whole uncertainty around the whole pandemic. And we know that the lockdown is also uncertain. We might see more extended period of lockdown. Nobody knows yet how deep the situation is,
Mm,
which is why most experts have been waiting and watching. They'll definitely see a change in the way it is it functions, the whole process of
right.
deals and potential deals, the due diligence, everything will change, but they are yet to look at the larger impact. And of course we don't know as to when this would end, so clearly a lot of uncertainty even in the investor's mind. But as things progress and as the vaccine might be closer to completion, we might see some sunshine ahead.
Definitely, sunshine is something we can all hope for, considering we've all been locked within our houses for quite a while now. But Veena, thank you so much for talking to me today, for explaining to our listeners all about what the distressed asset space is going to look like in the coming few weeks. Hopefully you and your family stay safe and take care as well.
Same to you, and I wish all the viewers safe quarantine.